Welcome to the Microfinance podcast. Listen to inspiring interviews and take a look at tools and products that are used in the field. This podcast is produced by MicroSave, market-led solutions for financial services, and is brought to you by Moving Planet Films.
From a business case point of view, to enable branchless banking to happen, the biggest issue that I would say remains still unclear is the remuneration of the agent. For the mobile operator, we understand that there's clear benefits in doing this. Churn reduction. Mobile operators are always fighting with reducing the rotation of customers in their customer base. If my money is linked to them, if I'm used to how I can interact with my money through their user interface, that's a way to lock me in. It also offers for mobile operators the opportunity of having a lower cost way of distributing prepaid airtime. They don't have to sell any more of those physical cards, and that's a cost reduction. They can also get more money on the data services, which they're very eager to promote. So for the mobile operator, there's a lot of pluses. On the banking side, there's also opportunities. To the extent that people leave money there and their accounts, that's float. And then banks and microfinance institutions have an opportunity to shift and make more revenue over transactions, which is a part of the business that they're missing out on today, because offering those transaction services is too costly. But if I, as a financial institution, collect a little bit of money every time a payment happens, that's a good source of revenue that can support the rollout of the network. And then, of course, you take people into the service by offering these payment services. Over time, you get to know them better, and then you can position the right products, savings, insurance, or credit. So for the banks, there's a good rationale. For the agents, this presents opportunities to revenues, but big headaches. At the end of the day, the cash problem is not going away. That is what makes transactions expensive today, and people will initiate all payments with cash. The only question is how to convert that cash into electronic, and who is taking that residual cash position, who is taking that cash and depositing in the bank account when he has too much cash. That's the role of the agent. The store that takes on the banking agent role has two main concerns. First, the security risk. Because I have more cash than I was holding before, I'm a more likely target. And second, I have to go to the bank more often because I'm building up cash a lot or I'm drawing down cash too fast. Those are the two bads that I need to do, but that's why you're getting a commission. So fundamentally, you're being paid to do the trade-off between how much cash do you want to hold, which creates a security issue, versus how often I want to go to the bank to rebalance that cash position. That's a trade-off between two bads. So clearly that agent needs to be incentivized to take that on, and that's the agent commission. The problem is that most things that store is selling, he's selling at a commission probably north of 10%. 10% for a prepaid card, maybe 20% for a bottle of Coke. At that sort of commission, it's very hard to imagine banking services to be much demand for it. If I take a 10% hit just for the privilege of making a deposit at a store, that's not going to work. So there's a fundamental business model problem at the store. The best way to solve this problem is through volume. At the end of the day, the store doesn't really care about percent commission. It cares about how much money am I going to make out of this activity at the end of the month. Right now, the branchless banking solutions that are out there, the prototypes that are out there, really have worked more on a higher margin basis and less on a volume basis. To make this pervasive, we need to make this a self-evident business proposition for the agents, and that is going to come through getting more transactions. So the kind of work that needs to happen going forward is much more concerted effort at aggregating all the transactions that are happening today through other channels. Utilities, they're being paid in a much more expensive way because the utility company has an agreement with the butchers, and that's how people pay their bills. Government that needs to pay social benefits or pensions to retirees, and they have an agreement with the post office that does it in a very costly way. employers who are paying salaries and have their own way because they have an agreement with the bank that they'll send someone from the capital once a month to be paying the salaries in cash. All those transactions are happening today at a high cost in a very fragmented way. So the challenge is, how do we grab all those transactions and put them on this much cheaper transactional platform through branches banking, get volumes up, and priming the whole business for the agents. The agents are really the party that no one is worrying about today.